Hey folks, Dan Frio here with some breaking news for December 18th, 2025. We had inflation coming in now and then actually dropping. It's plummeting. And it was supposed to be at 3.1% over 3%. It's actually coming in at 2.7. And we have a jobs report that's looking pretty darn good as well. So today we're going to talk about inflation, jobs, and how all that's going to affect these things over here. Because if you're a homeowner trying to figure out, okay, does it make sense to refinance? Maybe you're a home buyer thinking, okay, if rates go down a little bit further, maybe I can buy a house in 2026. So my name is Dan Frio. I'm actually the host of the Rate Update, and I'm also a licensed loan officer in all 50 states as well as Puerto Rico. My goal each day is to come in and explain to you guys what the heck's going on with those and the whys behind it. So we have huge news today. Okay, so remember everybody saying, okay, inflation's running out of control. It's going to skyrocket because of tariffs and everything else. Well, I came in recently and I said, okay, don't be surprised. Just don't be surprised if you see inflation actually dropping. I don't know if anybody else said that recently. And I also said the jobs market, okay, it's cooling, attrition and some other things, but it's not falling off a cliff. So we had two pieces of those pieces of the puzzle today that came in. I think we're going to have good news for these over through here. So I think we're going to start dropping in mortgage rates. So November's consumer price index came in at 2.7. It was supposed to come in at 3.1. See right down through there? It's actually dropping. Well, here, let's go over to the economic calendar so I can show you what news it came in. But here's what we're looking at. We're looking at the things the Federal Reserve monitors. They're following this over here, inflation. Well, we'll get the PCE tomorrow. That's the personal consumption expenditure. But today we got the CPI. Those are things that you and I look at. And then tomorrow we're going to get a little bit more of a jobs report. But today we got the initial jobless claims and continued claims. Both of these are throwing positive directions. So let's get over to it. I can show you guys what the news came in today. So right through here, we had continued claims. That's one thing we really focus in on because here's what I look at. Okay, if you let go, okay, can you get absorbed back into the market? Are you being able to find a job? Well, this is kind of telling us yes. Okay, so let's look at the numbers right through here. We got initial jobless claims. Last reading was 237,000. It was supposed to tick down a little bit to 224. It came in right at the button. Okay, and then you go down through here and you're saying, okay, continued claims. Are people going to get let go? I mean, not as much right now as there is, but are they being able to be absorbed so it doesn't keep compounding on itself? Well, the numbers are actually coming down. So yes, it's getting absorbed. Now, here's where the Moneyball numbers are. I don't know why it just did that, but let's go through here. Here's the inflation numbers, folks. So let's get to some of these numbers that we want to look at, and I'll explain it to you what they are. Core CPI year over year, that means that they stripped out food and energy like gas and eggs, and we're going to get to there in a second. So the reading that was last came in was 3%. They expected, now it's going to go to 3, maybe 3.1. Actually came in at 2.6. Now here's the Moneyball number. CPI year over year. Last reading was 3. They expected to go 3.1. I said, I don't think so. I think you might see a print that's actually going to go down. That's what we got. It actually went down to 2.7. So now this is basically saying, look at the Federal Reserve. They're sitting here saying, okay, jobs, they're not crashing, but they're not good. We have inflation that's actually coming down. We didn't know that. How does a mortgage guy that's been doing mortgages for 35 years get this more accurately than economists and maybe even the Federal Reserve? Kind of scratch your head on that one, doesn't it? So let's get back over through here. So here's the numbers that we're seeing, but I want to show you this piece of the puzzle right through here. Here's the inflation. Now, you can agree with me, disagree with me, or whatever you want. I try to come in each day and debunk those house crasher people because they're giving you wrong advice. I even come in and try to, debunk a lot of mainstream media because a lot of the hype they give you is just hand-chosen data. So let me do something for you right through here. Here's an analysis, and we've been seeing debates and the right versus the left and left versus the right. What's going on with prices? Well, here's what's going on with prices, folks, and I'm unbiased in this. So I just Googled and I did some AI research and said, okay, where are these prices going? Okay, so to me, we buy eggs and I buy chicken and I buy bread and I buy soda. Where's prices have gone? So let's just look at this, and you can do your research as well. Go to ChatGPT, anything you want, fact check me, leave comments down below and let me know what you think. But if you go through here, let's just go to eggs. That's the biggest headlines that we see. Okay, eggs in 2021, $1.67 a dozen. Okay, they went all the way up to in 2024 to $3 a dozen, even more than that. Where are they now? $2.86. So are they lower? Well, if you go through here, they're basically back to where they were in 2022. I'll give that a thumbs up. They're lower than where they were in 2024. So is the data that we're getting there accurate? Yeah. Okay, so let's go to the next piece of the puzzle, chicken. Okay, it was 154. It's 206 now. Is that up? Yeah, it's up. I'm not trying to hide anything here. This is the data. You go to white bread, you go down through here in 2023. Look at 2023 numbers. 196, it's down from where it is today. Okay, go over to soda. It was 230, it's 215. Go to gas, 366. Look at this in 2022, $4, 290 now. So that's now here's what's making housing unaffordable. Taxes and insurance. Look at this over here. This is homeowners insurance for a typical house. Let's just go. Average rents was $1,200 in 2021. It's now $1,600. It's been steadily increasing. Family health insurance. Now, this is the one you sit here and saying, okay, do people need help? Yeah, but the costs are crazy. Look, in 2021, $22,000 a year. Where are they now? $26,000. It's nuts. So this is where we're getting poor. You're getting poor here. We're getting hosed on housing. Homeowners insurance, look at this. Look at this. You got taxes, homeowners insurance, $1,900 for the average homeowners insurance in 2021. What is it today? $3,500. So you have insurance on homeowners. You have health insurance for our families. This is where we need some correction, folks. Okay, so home prices, they've been basically stagnant for 2 or 3 years. We can't afford housing because of this stuff. So check out my housing forecast that's coming out next week. It's going to tie all this stuff together and more. So let's get over to see how the bond market's reacting to this, and it's reacting pretty darn good. So we open up the day, and the bond market, when we follow for mortgage rates, is up 9 ticks. So let me explain to you what we follow on this channel to really get an accurate beat on where mortgage rates are going. We follow that bond up through there. It's called the mortgage-backed security. This is how we follow mortgage rates. How do you follow mortgage rates if you're a homeowner? Let me show you a tool that we just created. So if you're a homeowner right now, and you're trying to figure out, okay, does it make sense to refinance now? Should I wait? Got rates going to go down? Well, go over here. I created what we call RateWatch 2.0. So what you do is you plug in your mortgage information and let me know what rate you'd be interested in refinancing. I'll call you, I'll text you, I'll email you. We'll go through the numbers, see if it makes sense. If it does, we'll get you started. If not, we'll wait for the rates to maybe go a little bit lower. But wonder if you're looking to buy or looking to build. But let's get over to see what the markets are doing right now. How you read this right through here is if that number up there goes up, that means mortgage rates are coming down because that's the price of a mortgage bond. Here's how you read it. Price goes up, rates come down. Let's look at what happened over the last few days right through here. Pretty good opening. Now, here's my concern. You see this opening right through here, this dead cell? This is what we call a gap. Okay, so when you see a stock or when you see charts gapping like this, here's what happens most of the time, and I don't like it in comparison to this chart, but hopefully we buck the trend. Usually when we open up, it'll go back down and test these levels, and then it might go back up from there. So we hope it doesn't come down and test these levels because, again, as this goes down, mortgage rates are going up. So at the closing bell today, I'll come back and I'll show you how the market's ended. But so far, so good. The market's up 10 ticks. Let's get over through here. What the Federal Reserve, what are they going to do in 41 days? Now, this number might start changing a little bit because now we have inflation, might be a little cooler than expected, which we called. And we might not have a complete dismal jobs market. So now the Fed might be able to step in and say, okay, we have a little more room to cut. So in 41 days, what's the Federal Reserve going to do? I don't think it's going to really change right now. There's still a 73% chance they're not going to cut, but you can see these numbers might change over the next few weeks. So I'm still on the sidelines saying, okay, if I'm looking to buy maybe in the spring or looking to build, I think you're good. But if you're looking to close within 30 days, I'm still saying, okay, just lock in. Don't worry about it through the holidays. Yes, rates might come down a little bit. I'm actually expecting them to come down a little bit more because my focus is, or my call for Q1 of 2026, those rates over there on the 30-year fix, I'm saying they're going to be about 5.875 to 6.25. We're a little bit higher than 6.25 right now because I just recently made my adjustments, and I think we're going to see those rates just trickle down right into that range. Nothing going to plummet, nothing going to really skyrocket up or down. So if you're closing within 30 days, lock. If you're not closing within 30 days, just float. Go over to here. Make sure you're pre-approved or pre-qualified to buy that house or maybe to build that house. Just making sure your credit scores are accurate. The income that you have is what the bank uses to actually qualify you. And what programs are best for you and not the bank. So those are what we can do here. My name, like I said, is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. The unique thing we have here is my bank that I work at. I've been blessed to find this bank. They're licensed in all 50 states as well as Puerto Rico, and that's why I have that license. But they had an ingenious plan. They're like, okay, when people call in, they want multiple quotes. So we don't want to just give them our products. What if we got a whole bunch of lenders together, kind of like a broker, and said, okay, we need more banks and credit unions and just mortgage lenders to be able to offer more programs and better rates in some cases. Well, that's what they did. We're set up with over 30 other lenders. These are some of the biggest companies in the country. Reach out to us, because you can work with yours truly throughout this whole process. So join us each Wednesday. Me and Alan come in and we show you exactly how we do this. We compare your loan with over 30 different lenders. So my slogan is this: one application, one credit pool. We're going to compare your loan with over 30 different lenders. How do we do that? Well, check out that video right up through there. You're going to learn, and you'll see us walking through what we've done in the past on Wednesdays. So join us each Wednesday. But now, hopefully, you understand a little bit more. If you're a homeowner, does it make sense to refinance? Well, check out the tools that we have. If you're looking to buy or build, reach out to us, making sure you're getting qualified and pre-approved with the correct programs and the correct, basically everything. But now you may understand a little bit more about that age-old question everybody asks me every day. Dan, what the heck's going on with those and why? So that's what my goal is each day. So folks, if you haven't subscribed yet, please do so over there. We're this shy of 40,000 subscribers. I think we're about 60 short. So can you be the 40th subscriber? Hope you are. But I will be back today at the closing bell, let you know how this makes sense for the day. But if you have any questions for us, please reach us at therateupdate.com. There's all those tools up there to help you navigate home ownership, or maybe does it make sense to refinance? Thanks for watching, folks. Hope you learned something today. Hope to hear from you soon. Bye-bye.